Well, hello everyone. We seem to have an international banking crisis on our hands. As investors, is this an opportunity or a crisis? Let's find out. Well, it all began on the 10th of March with the failure of Silicon Valley Bank, which has been dubbed the biggest US bank failure since the 2008 financial crisis. So you can see how serious this is. This was followed by the failure of Silvergate, which is a crypto bank. And on the 12th of March, Signature Bank also failed, causing panic in the markets. So what actually happened? The first thing you would notice about these banks is that they are not your normal bank that you and I will go to for banking services. These are non-traditional banks which provide banking services to high-risk speculative businesses such as technology startups and crypto clients. Reports in the media say these banks took depositors' money and invested it in 30-year government bonds. And this was during a period of very low to zero interest rates, which was a couple of years back. Now, due to historically high inflation that we are currently experiencing, central banks began increasing interest rates rapidly in order to control the high inflation. Now, as we may know, when interest rates go up, the value of government bonds decline. So these banks lost tens of billions of dollars when the value of the government bonds that they were holding dropped. Now the clients got wind of this, panicked, and all at once rushed in and started transferring their money out of these banks. This caused the banks to run out of money and fail. It is a classic bank run causing a classic bank failure. Now, the US government has come in, took control of these banks, and actually gone as far as to guarantee that the depositors will get all their money back. This obviously they did in a bid to try and calm the markets down. But that did not seem to help much because despite that, bank shares all over the world continued to decline. We see this in US, in Asia, in Europe, and in South Africa as well. The smaller regional banks in the United States were not spared as people panicked and taking and withdrawing their money and transferring it to the bigger, more well-capitalized banks such as Citibank, JP Morgan Chase, Goldman Sachs, Wells Fargo. So these are the traditional banks which are deemed to be safer and well-capitalized. So people started transferring their monies to these banks. Obviously, these smaller banks ran out of cash and started failing. I mean, you can see from this weekly trend, you can see that the share price, in a matter of 1 week, share price declining by 79.5%, 72%, 21%, 37%. So it's been a bloodbath, and a lot of these regional smaller banks have failed already. The latest casualty to go into the ICU department is First Republic Bank. The US government has gone so far as to ask the big traditional banks to ask them to deposit over $30 billion worth of money into this bank in order to keep it afloat and to prevent it from failing. So it hasn't been a good week for the banking sector. So having said all of this, what does this mean? How do we as investors respond to this? Do we run for the hills or do we take advantage of the situation? You must remember, in the short term, the markets are irrational. They are driven by emotions and manipulation, which at the end of the day causes a mispricing of shares of companies. It is this mispricing that may result in shares of great companies selling at great discounts, and that is where we come in. Take, for example, Capitec. Since the 10th of March, its share price has declined by 6%, which to me is totally irrational because Capitec is a different type of bank from the ones that are failing. It is still a strong business and it is well capitalized. So in my opinion, this is totally irrational. And if you want to know why I am so confident about Capitec, go watch my three-part video series on Capitec, where I explain in detail why I believe Capitec is a great business and why myself am waiting for the share price to drop low enough for me to start buying shares. And you will remember from the video that I value Capitec at 1,633 rands per share. And I am looking to start buying when the price hits my first buy level, which is 1,529 rands per share. Now, although the share price has been declining this past week, it has not come down low enough to reach my target buy level. It has actually bounced off this support level, which coincides with the 40 simple moving average. So I am hoping that in the next week or two, the panic will continue and will actually drive the share price through this very strong support level and drive it low enough for it to reach my first buy level. We will see. Even if it doesn't do that, it's still okay. The markets, I am very much spoiled for choice in the markets at the moment. There are plenty of businesses that are selling at great discounts that I can buy. So I'm actually playing hard to get with Capitec at the moment. So we will see what happens in the next coming weeks, and I will keep you guys updated. That concludes our market update. I hope you enjoyed the video and you found it to be informative. Now, if you want to fast track your path to financial freedom by owning the most profitable businesses in the world, I invite you to subscribe to my ebook Mntom'nyama playbook. In this playbook, you will get a detailed monthly market analysis of the JSE and US stock markets, and you will get 2 deep dive reports of the top 1% companies in the world to invest in. With this monthly package, you will be able to build a strong portfolio of profitable businesses that will help you shorten your journey to financial freedom. And if you want more details, contact me on mdleche2020@gmail.com. Happy investing, and I'll see you on the next video.